Hey, good morning, everybody. Welcome to the infamous Friday the 13th, November. Hey, I hope that your week has gone well as we get ready to head into the weekend. Yesterday was, well, let's just say we gave back some of our gains from earlier in the week. But thanks for joining us today. Remember, there's a couple of things I think are very important right now as we head out of this year and into 2021. One is, how much risk do you have in your current portfolio? Do you know what that number is? Is it 10? Is it 50? Is it 75? What is your risk number? And then how much risk do you have in your portfolio? What's your portfolio's risk number? That's why I developed the financial x-ray. Give me a call and let's get you on the schedule to go through a financial x-ray of your current portfolio. And then number two is taxes. Folks, I believe we are in the lowest tax brackets you and I will ever see. So now's the time to start planning for the best you can do in terms of taxes in retirement. Look at our Roth conversions, look at other options that may be out there. Give us a call to start your financial x-ray. That number is 863-382-0037. Hey, looking forward to our conversation as we wind down the week with Dave.
20 before 9. Well, it's 8:40. That means time to find out what's going on with money in the world today. Wall Street affects your life even if you don't have a fat butt brokerage account, because it even affects the interest rates you get on your passbooks and the like. So, in short, this junk matters to you. Let's go downtown to the guy who knows what junk matters, to Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. Hey, welcome to Friday the 13th. I thought I'd just throw that in there for you.
You just had to remind me, didn't you? I had two black cats meet me in the driveway this morning, which probably is the indication of what the day is like.
So that means you should have a great day today, right?
Well, I hope so. I didn't cross either of their paths, but one of them gave me grief because she didn't like the cat food I had for her. That was my Friday the 13th grief producer. Set the table for the morning. Yesterday was kind of what we were looking at when we started the day out. Profit-taking, coronavirus worries and whatnot. Dow was down 317 points. NASDAQ was down about 77, and the Standard & Poor's was down by about 36, which generally, if we're following the rhythm of the week, that generally means we're going to find a little bit of looking for bargains on the market, underpriced stocks, and a little green ink today combined with, and your guess was they're just sick of thinking about the coronavirus for the moment.
Yeah, I'm thinking that's what it is, because, and it could be that, hey, you know, we saw a little bit of a dip yesterday. Let's buy it because we think 2021 is going to be a decent year. So let's get in now. You never know what those guys are thinking on Wall Street, the trader guys. So, but they're out to make a dollar, and if they think they can, they're going to start buying again.
And this is one of those poster child situations why day trading is a risky proposition unless you've got a few $1 billion to throw around in a research budget. The rest of us in the real world are looking at it and saying, well, what? 300 points down one day, 200 points up the next day? Trying to make money off of the market day to day just does not make good sense, does it?
No, it doesn't. It can be a hard road to hoe. And so not something you want to try.
Yeah, that's probably the simple way to put it in the process. I do notice that a lot of my big winner list this morning kind of backs up your theory that a little COVID fatigue is setting in. A lot of the travel-sensitive and COVID-sensitive stocks like Disney and Carnival are all on the upside this morning. So I think your read that it's just COVID fatigue might be making a bit of a difference there.
Well, and Disney actually reported earnings yesterday, so after the bell closed. So that's what's helping them today.
Okay, we'll get to that in a second because we got one bit of macro news, and it's an inflation number, which matters a lot. The Producer Price Index came out. It was expected to do about 0.2% of an increase last month. It went up 0.3%, which is like we were talking yesterday. One of those good news is bad news is good news. We'd normally go, oh no, inflation, but we really appreciate the increase and indication there's more demand out there than we thought, right?
That's right. We really do. And that's the case now. Is any kind of increase in demand that we see is a good sign for our economy. It means people are spending money, and that's important to our economy for what we've gone through the last 6 months or so. And then the core actually came in not quite exactly what they expected, but still not too far off. And so any of those numbers heading in the right direction are going to be good right now, given where we are in our circumstances. Those items are positive for us right now.
Yeah, the annualized producer price index, looking at only like 0.5% inflation, it's really not much of a concern. So an indication that's a surprise to the upside just indicates improved demand, and that's always good news given what we're hoping happens to the economy. You kind of teased it because I didn't realize Disney has reported. Let's go into those reports because Disney's one of those big companies that affects Florida, and if they gave news, let's hear what it was this morning.
All right, so Disney. They reported a quarterly loss of 20 cents a share. Now that sounds bad, but that's 51 cents better than they had expected. So that was good for them. Revenue was ahead of the forecast. They are, I don't know if you heard this morning, but they're going from 25% park capacity to 35% park capacity. I'm sure to help with the holidays and demand there. So that should help them in the coming quarters. They did say they're going to not give a dividend payment in January, but they expect to resume them in the quarters after that. So
that sounds like a good positive forward-looking report, doesn't it?
It really does. And so they're trading up this morning a little over 3.2%.
And that's one of those travel-sensitive stocks that I was responding to on my winner list. I'm glad to hear that they're looking forward and being optimistic. One of the comedians that we had on the agenda that last comedy night we did down at the hotel had a regular gig at one of the Disney clubs and ended up getting canned as that part of that last layoff. So anything that's good news for Disney is good for employment right to our north.
Yeah, and right here, because we have a lot of people that live here in Highlands County and work for Disney.
Oh,
so, yeah. So that's a good thing for us. So let's switch gears just a little bit. So let's do a little gambling.
All right.
Yeah, DraftKings. They are that mobile betting service. They reported they lost 57 cents a share, but that's better than expected, kind of like Disney. So they were expected to lose about 61 cents a share. So a little better than expected there. Revenue was ahead of forecast. They were helped because, professional sports got kicked off again finally, and they are making some projections for 2021. They're expecting a 45% year-over-year revenue growth for next year. So so some big projections there. They're trading up 12% this morning.
That's a healthy growth number. I guess I'd always stereotype the notion of betting on sports on your cell phone during a pandemic would be pretty easy, but then it occurs to me, as you said, it didn't have anything to bet on for a few months.
Exactly, and that was the problem. There was just nothing there to really bet on. And then we have two kind of tech companies. We have Cisco Systems and Applied Materials. Cisco Systems beat by 6 cents a share. They were helped along by, again, people staying at home, working from home, needing new equipment to be the best they can be from home. And so they're up about 7.5% this morning. And then we got Applied Materials. They're a semiconductor company. They beat by 8 cents a share at $1.25. Revenue beat estimates as well. And they gave some upbeat guidance for the current quarter. So some good news there for them. They're up almost 3%.
Cool. Good to hear good news in the morning, yeah.
So I got two companies that I'm going to bet you don't know who they are.
I'll take a chance. Let's hear them.
So Farfetched. You ever heard of Farfetched? What a name for a company, right?
Not on Wall Street, I haven't, no.
So Farfetched is a luxury online retailer.
Okay.
And, that's but they did okay. I mean, they lost money, but not near what they're expected to lose. They lost 17 cents a share compared to the 40 cents a share they were expected. They saw revenue come in ahead of estimates. They say well ahead of estimates. And so they were getting a pretty good sized bump today. They're up about 13% this morning. They will open at a new 52-week high.
What kind of luxury goods do they sell? Do you have any idea?
So I went and looked because I knew you'd ask me, right? And so on the men's side, I don't think I recognize any of those brands. I'm sure they're luxury lines that outside of I do. I see Versace, so that's the only one I really recognize here.
Okay.
On the women's side, though, they got Tory Burch shoes and bags and loafers and Canadian Goose and Versace and some Adidas, Michael Kors, Gucci.
Okay.
So, definitely luxury line.
If it's a name that you like on your handbag or embroidered on your derriere, they probably sell it, right?
You can find it. So the last one I have for you is Spectrum Brands. So who is that, Dave?
I'm thinking cable company, but I don't think so.
No. Black & Decker.
Oh.
Nature's Miracle, Spectracide, Cutters, Repel, Hot Shot, Black Flag, Liquid Fence, Iams Dog Food.
They do a bunch, don't they?
They do. They do a bunch of stuff. And Remington, George Foreman. So they're very diverse, to say the least. And they reported about not quite, but almost 50 cents a share ahead of expectations. Revenue beat the forecast too, which I find interesting because up in Jackson, Tennessee, where my daughter and son-in-law live, they have a Black & Decker plant. And when we were up there in October, you'd see there was trucks lined up for as far as you could see, waiting to get loaded up there. But they finally are starting to recover from their supply chain disruption. And so they're up almost 6% this morning.
All right. Resetting the table for the morning. Yesterday was a down day on Wall Street. I was kind of surprised that NASDAQ didn't lose more after President Trump's decision to ban trade with a bunch of Chinese firms that he says have ties to their military, but NASDAQ was right in line with the others. Looks like it's kind of in line with the others this morning, too. 45 minutes before we open. Which way are we heading, Phillip?
So we are definitely heading up in terms of stock pricing today. We've got the Dow up about almost 0.8, $230. The S&P 500 is up a little over 0.7. That's $25. Yep, I'm here. Can you hear me now? All right.
Yep.
You lost me there for a minute, huh? So the S&P 500 is up 0.7, about $25. The Nasdaq's up a little over 65 basis points, up $79. So everything's looking good there. The commodity side also looking pretty good this morning. Silver's up 2% to $24.80 an ounce, and gold's up a little over 1% at $1,893 an ounce. Crude oil is going the wrong direction today, Dave, down 1.7% to $40.44 a barrel.
Yeah, it's a little bit of an improvement over the delayed quote I've got, so let's cross our fingers it found a floor above 40. That'd be nice, wouldn't it?
That would be nice. That would be nice.
Yeah, overseas markets, Japan and Hong Kong pretty much responded to the president's trade decision on Chinese companies negatively. They're in the red this morning. Europe is mixed, one side or the other of the zero mark with no real trend halfway through their day. Phillip, like we were saying at the outset, up 500 points one day, down 300 the next, up 200 the next. This is not a time for a person with a lot of risk in their portfolio to be getting close to retirement. How do I find you to find that risk and maybe get a more secure retirement?
Dave, that's a good point. Risk is important because it's the one thing that folks can control in their portfolio. So my question always is how much risk do you have in your portfolio? Is it a 5? Is it a 25? Is it a 75? What is that number? And then how does that compare to your number? To find out, give us a call, 863-382-0037. And then you can go to my website, statlerfinancial.com. You can click on a link there and also schedule an appointment. Also have some replays of some webinars on there too, Dave. They can catch us this weekend, Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning at Highlands News Talk, 7:30. And I'm guessing now that I said that Saturday, you're probably not going to hear me, are you?
No, we're there. I think it's an evening game on Saturday.
No, I was thinking of the races.
Oh, the races. No, the races are on OJ this weekend. So
okay. Gotcha. Okay, good deal.
We got John on the AM on Saturday. We're ready and raring to go. Phillip, thank you so much. We'll catch you on Monday morning. Fair enough?
All right, man. You have a great day.
Thank you. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us. I hope you have a great weekend. And I look forward to speaking to you again on Monday.